Matt Miller is a general partner at Sequoia Capital, one of the top venture capital firms in the world. He's based in Silicon Valley. He received his degree from Brigham Young University. He was first a founder, and now he worked at Goldman Sachs. And he has been a partner, an investor at Sequoia for the last few years, investing in companies like Docker and Barracuda and Nimble Storage and many, many others. Let's give a big startup grind welcome for Matt Miller. Okay, you've been in Toronto for a few hours. Took a late flight. What's been your startup or not startup? Could be anything. What's been your favorite thing about Toronto so far?
The energy amongst the engineering community, and I think that's something we've seen at Sequoia for a while. Is the talent and caliber of the engineering that comes out of Toronto is on par with any of the talent we see in Silicon Valley from engineers. And just in meeting with the startups that I've had the chance to talk to since I've been here, that's just been like further evidence of that. Is the caliber and quality of engineering here is just world class, and I think that sets it up to be a very nice environment over time. They can continue to grow and build great companies, and so it's been very exciting to see that energy with people.
One of the great things about Sequoia is that you do actually invest outside the valley. Now, explain to us a little bit about the stages. So there's early stage that's not necessarily that you don't do a lot of investments outside the valley, but later stage you do. Tell us what Sequoia Capital is, and tell us what kinds of investments you make and how the stages work.
Yeah, so Sequoia's been around for a long time, close to 42, 43 years now. And I think the way we approach investing very much goes to how we were founded. So we were founded by this guy, Don Valentine, who was an old school VP of sales and marketing at the semiconductor companies in Silicon Valley. And he saw these great engineers that he was working with that were all around him and says, look, you've got really killer ideas. Let me help you with the go-to-market. Let me help you with some of the business side of this idea, and we can help build a company here. And part of that was investing in fundraising. Let's align our interests. I'll invest a little bit. I'll help you raise money to get your idea off the ground. And so that's how Sequoia started. It's always been, let's be your partner side by side in building a world-changing, dominating company. And so as we look at partnering with entrepreneurs, we want to make sure we put ourselves always in a position where we can do that. And so we invest in companies at all stages. In the earliest stages, we have a preference to do companies that are right next to us, because when you're a very young company, you really benefit from having that partner down the street. And so we have this kind of, for a while we had this mantra that you should be able to ride your bike to the office of the early stage entrepreneur that you back. But as companies get later and further along and get more adoption, they need different things. And we feel like the Sequoia benefit can spread to that company even though they're not down the street, and we can bring things that add value, and those other areas are probably taken care of by a great local partner. And so we invest all over the country and the world at the growth stage. So we have two investments here in Sequoia in Toronto that we've made. One is Achievers and one is Virage Sale, where those companies had grown to a certain scale and had local people around them, so that we could partner with those local people, bring a little bit of the benefit of Silicon Valley and our experience with some strong local partners and help build great businesses. And so that's, when we come to Toronto, we look often from the growth lens, because we feel like we can do right by you and do a good job by you as a partner.
There's really
build a business.
There's really a different type of entrepreneur. As soon as you get outside the valley, you're from Southern California, and I'm from Florida, and so as soon as you get outside the valley, you see an entrepreneur who, it's almost like I don't want to say they wanted more, they're trying harder, but it's like they know they have, like, they're going to have to make it work, right? Like, yeah. There's just less capital here. There's, yeah. But in through that, it creates these people that create amazing businesses, right?
Totally agree. It's like people that are out of the valley have an even bigger chip on their shoulder, that they got to prove something, and they got to prove that they can do it and that they can make it happen, and they don't have this whole infrastructure spoon feeding them everything. Not saying that it's easy in the valley to build a company, but it is harder outside of that, where you don't have that infrastructure in place. And that resolve and hunger creates greater entrepreneurs. I mean, we see more businesses outside of the valley that are actually better businesses with better operating metrics in the businesses, because they didn't have tons of capital thrown at them early on, or they had to get profitable, they had to make those tough decisions. And as a result, we see some really high caliber companies be built by founders outside of the valley.
I thought it was interesting. We met with entrepreneurs all day today, and you're getting all sorts of different reactions. But there was one entrepreneur who is running a very successful company, and you're just kind of getting to know people, offering to help. And he said, well, I'm not looking for investment. I'm not looking for investment. And I thought your response was, well, great. I'm just here to say hi. I didn't offer an investment. I just, you were just trying to be helpful. But that kind of like it's like that edge, of like it's like you talk about, like I've seen it in so many entrepreneurs outside of the Valley where they're saying like I'm like I have to make this business work. This business totally relies on me, and you may be able to help, you might not, but at the end of the day, it's still going to be me who has to live with it. So
yeah, it makes you stronger, right?
What's tell us just a little bit about where you grew up and what your dad did for work, or your mom, and tell us a little bit about your family.
I grew up in suburban Orange County. I literally lived in the shadow of Disneyland as a kid. You could time the clocks by the fireworks.
Do you hate Disneyland?
No, I love Disneyland. I love Disneyland, but you could time the clock by the fireworks at 9:30 every night because you could see them from my mom and dad's front yard. My dad was an aerospace engineer at Northrop Grumman, building military aircraft. I was a big nerd as a kid. I started building computers and writing software when I was 12, 13 years old. Taking classes at the community college with my dad in software development in high school. So you imagine that was, great for my social life because I got my spare time. But always was fascinated by technology and always was fascinated by the things that were happening in Silicon Valley and with Microsoft and with a lot of these other great companies that were getting built, and always wanted to be involved in that. And so was doing that throughout my youth. Took 2 years and was a missionary for my church in Sweden, where I just took 2 years off and said, look, I'm going to go help other people. And learned tremendously through that, just like the hardships of life and how that can impact you. And saw people who were immigrants from, countries in the Middle East that they had tremendous hardships, and they had come there as refugees, and got to try to help those people, which was a great learning experience. And then went to school and started out studying computer science. And literally one night was on a miserable blind date at a P.F. Chang's restaurant, and that entrepreneurship bug hit. And I was on one of those dates. You know how you go to those restaurants that have like a forever wait list, like especially in these chains in the suburbs. And they gave me one of these pagers. The conversation was awkward. I'm like, when am I going to get to a table? When am I going to get this thing over with? I was like, why don't they put up a screen and show you the wait list, and there could be content that can entertain you? And so I started working on it. I was doing the coding. My roommate was doing the graphics, and we put up a mock-up, and we put it in a restaurant there in Provo, down the street from the school. And we started going door to door selling advertising, and weaseled our way into a bunch of advertising dollars. We're like, aha, we figured this out. And put in a couple other restaurants there. And
when you can I brag a little bit? I think the first month you actually did $10,000 in ad revenue, right?
We did.
In college kids.
We did.
I mean, that probably felt like you're the king of the world,
right?
We
thought we were on top of the world. And we weaseled our way into it, stealing pennies from art galleries and movie theaters and the local basketball team and everything. And the concept was it would show content of things you could do in your area, and advertising, things you could order and then games, it would show the wait list, and you see yourself move up to your seat. Anyways, we went on and raised $1 million of seed capital, through our school's business plan competition, and worked with the national restaurant chains, took a couple years off school, and ended up not working out. It was a kind of a chicken and egg problem, in that to get a lot of screens out there, to have the capital to put a lot of screens out there, you had to prove that you could really drive ROI to the advertisers, and so it was a very expensive business as a college project. And so I ended up selling my stake and going back to school and finishing up. But it was really a very big change for me in my life to do that and experience that. I had highs and lows where we would get a big nod from Outback Steakhouse. They would want to put this in all their restaurants in Florida, and I had lows that I had to literally fire one of my best friends. And when capital got tight and realized it wasn't a good fit, and so that really changes you. And I don't think there's anything that helps you learn and commit yourself more than some of the highs and lows you go through when you're running a business, which is part of the reason I love what I do now, is because I get to work with people like you that are building companies, going through those struggles and the ups and downs, and I have a real appreciation for it. And I think people like you make the world a better place because you have vision and you fight through those highs and those lows.
Well, it's a very unique thing about you versus I've probably interviewed, I don't know, maybe 50 or 75 venture capitalists, and very few of them ever have that entrepreneurial experience. And I think, you know, when you have an entrepreneur I mean, I can see it when they pitch you. I can see, you know, you kind of putting the hat on of like, man, I can feel for where this person is and where they've been, and you know, I think, you know, that experience of, I mean, you raised $1 million, like this is 10 years ago, totally different climate, outside of Silicon Valley. I mean, talk about a high. That must have been really, really high, and then for it not to work out and you to go back to college, like, you know, you've experienced it.
I look at every meeting I have as how can I have that meeting be such that the person leaves feeling like they gained something, or hopefully we help them in some way, because that's how I would have wanted it as an entrepreneur. I mean, we meet with 1,000 companies each at Sequoia. Each of us who are partners there, we meet with probably 1,000 companies a year, just through different interactions, and we only get to make one investment a year, and so I'm going to end up telling almost everybody no. But I at least want to hopefully be helpful to that person, so that the things that I get to see from seeing that 1,000 companies and see what works and what doesn't work, I can hopefully at least share some of that, so that if it doesn't work out for us to become partners, that I can give you something back for the time that you're giving me by being willing to share your business with you.
So when you come back from Texas and you go back to school, you don't go into engineering. You actually
No, I changed my major.
You changed your major. So
Yeah.
what's up with that?
I mean, it was a couple things. It was one, I realized I liked selling.
Yeah.
And I realized that I didn't want to quite sit behind a terminal all day writing code. I wanted to be out selling. Two, I got screwed. Literally, was hooked up with a CFO who had taken advantage of us a little bit along the path, and I was like, I never, ever, ever want to let the controls of the metrics or finance of my business be in the hands of somebody else. And so I changed my major to finance and said, look, I want to go experience the business side of technology. And so I graduated in finance from BYU, and so I want to get the best credential I can get anywhere in finance. And so I cold called a bunch of the investment banks, focusing primarily on wanting to get into Goldman, and got a job at Goldman Sachs in San Francisco, working with technology companies, taking them public, thinking about acquisitions, thinking about financing strategy, and figured that would be the best way I could credential myself and have kind of a world-class education in finance and business through working with all these great companies that Goldman was going to have access to, and also to be able to see a lot of different companies. And so that's what I did next.
And what was that like? I mean, you had a little bit of break with college, but what was that like going from running the show, being the CEO, to being another guy at Goldman of all places?
Yeah, I mean, you go from being at the top to being at the very bottom of this
Yeah.
big organizational structure. But you learn the access that it gave you, literally, to come out of college and to be sitting across from a CEO of $1 billion company. And even though you were the young guy in the room, with time you got the opportunity to be very impactful in those conversations. And so it was a bit of a rush for me.
Yeah.
To be able to get access to such interesting companies, and that kind of fueled me to work harder and harder and harder and spend more time to keep learning and growing and deal with the negatives of being part of a bureaucracy like that.
Can you talk about some of the other thing is some of the relationships you made there? I mean, this is another theme I think for entrepreneurs that we sometimes forget. We're like, we want to get to the top of mountains, so it's like, let's just go straight up,
Yeah.
you know, and that you know, may or may not have, you know, going to Goldman, you say, well, what, you know, is that going to get you up the entrepreneurial mountain? Is that going to get you into venture capital, if that's what you want? Is it?
Yeah.
But there, I mean, tell us about, you know, some of the people you met.
Yeah,
some of the
it was
experiences you
literally
had
the
there.
best fraternity I could have joined, because you were working in the trenches with very smart people, 100 hours a week on very exciting things around the technology industry, and we all left. And so I'm now in the VC community. My best friend who I met there is now the CFO at Uber. My other friend's running this company called Munchery. I've got friends at Dropbox, Square, all of the major companies that are kind of up and coming in the Valley in various management roles. And I think that the thing to take from that is, even if you're not kind of in the end state you want to be at, none of us wanted to be investment bankers for life. we all loved finance, business, and technology. And we're like, this is a place that gets us access. If you're willing to take steps around the journey that give you better experiences, you generally can build good networks in those environments. And that's what really helped me about that was I just made a lot of really good friends, and we've now gone everywhere in the community, and we can help one another. And it's been great.
Let's talk about Sequoia. Let's talk about looking at companies. So you're going to look at 1,000 companies. So you've got a lot of data points. First of all, how quickly do you know whether or not something is going to even be interesting or even investable for your criteria? Is it how quickly do you just get a sense like, hey, this person's in the ballpark? They're not. Is it?
It depends. I mean, sometimes you know in the first 5 seconds.
Yeah.
Sometimes you know after an hour meeting. Sometimes you know after spending a couple months getting to know the person. It like anything in life. I mean, anybody that here has ever hired somebody has probably that same set of experiences about evaluating whether something's a fit. Some people you really connect with and are aligned with. Some people it's a little bit harder to see how it could be a fit. But
What do I have to say in the first 5 seconds?
I don't know. I mean, it's not anything you say, right? Like some things. I mean, I think anybody can relate to. You've been in an interview in the first 5 seconds, and you're like, it's probably not a fit, and that happens, right? But when that happens, it's on me to try to be courteous, and it's to try to be helpful. And sometimes it's just not a fit. But how can we help you anyways to make your business better? And that's what we try to do.
Like if I start a conversation as I need money. Man, that's it, right?
Look, I think the thing is to share. Yeah, to that point, that's always harder when somebody comes to you like that. But to share just a little bit about what you're doing about the business. And I look at it as more of you're trying to build relationships with people rather than you're trying to immediately go for the fundraising, because people want to help one another, but not always is going to be the right fit, right time, everything, all the stars to align for an investment. And if you couch it in a more, I'd love to get your feedback type way, it can be a little bit easier for you to get the benefits that they might be able to share with you about your company from their understanding of it than if you're just hitting them straight off the bat looking for cash.
I think too, as entrepreneurs, we get in, like being an entrepreneur is one of the most selfish jobs you could ever have, because you just constantly just think about yourself and your problems and what's going on. Well, this is what I do. You're like, what is this guy's like got problems? But you're always worried about you, right? And sometimes when you talk to people, that can come across immediately versus what most good investors will say is say, look, this is a relationship. We're getting into a very complex business relationship that's very difficult to get out. And or as I've heard some people say, like your VC is going to be your boss. He's on your board in some way. So is this a person you would want to work for or work with? So what
I would never term it as the VC is your boss, because that's definitely not the case. The VC is your partner.
Okay.
And you guys should be partners in building a great company. And that should be the relationship dynamic similar to a partnership. But just like marriage, you should really love your partner, and you should feel good with that partner because you are with that partner for a long time, both the individual and the firm. Because great firms, individuals change, life happens. So you should love the firm and you should love the individual. And they should feel that way about you because you're going to both be riding the highs and lows together. And so that's very, very important.
So talk about some of the things you see great entrepreneurs do, whether you invested in them or not. But what are some of the traits that you see from great companies or great entrepreneurs or great teams as you're getting pitched?
So one is the scope in which they look at opportunities. So some people look at building businesses, other people look at changing the world. And building businesses is great and good. But when you set your bar for here, when you shoot for here, you always come in a little bit here. If you shoot for here and you come here, that's still pretty amazing. And so that's one thing, is people who think and have a really passion for making a real fundamental change. Like one of the things that really attracted me to Docker as an investment is that it is a huge fundamental shift in the way everybody builds, ships, and runs applications. And it is significantly faster, significantly cheaper than anything else out there. And most importantly, it enables people who are building applications to run it anywhere, which kind of unlocks this whole amount of value creation for entrepreneurs and companies looking to build and create software. Things like that have missions and scope that are very large and dominant, and that can seem pretty daunting because they've been very successful in attracting a lot of attention. But thinking big. That's one thing that's very important. 2 is this incredible perseverance. Like, to be successful, you just have to be ruthlessly dedicated towards building something great and just have continual drive. And that comes across very quickly in meetings. It's like Michael, he's a guy with relentless drive. This guy like emailed me like every 10 days, come to Toronto, come to Toronto, come to Toronto. Here I am. So, that's a but in a great way. And that's what makes companies successful, is when they have people like that at the helm who are relentlessly focused on achieving what it is they set out to do. So that relentless desire. And then 3, the ability to build good teams and know that they can't do it all. You know, so often you see entrepreneurs like, I got to do it all. I got to be the man or the woman, or I got to be the person, and everything's got to flow through me. You cannot scale. No human being can scale. You've got to be able to recruit well, build people around you, realize that you and everybody else around you bring different talents, and you're going to build a team, and you as a team are going to go and achieve this great thing. You still have to be kind of the driver of it as the founder, but you're going to find somebody out there that's going to be a little bit better product manager than you are at some point along the way, and you're going to want to have that person helping you and on your team, and you're going to want to make sure you empower that person to help build a great success. And so you have to be able to recruit and team build well to be able to scale a big business.
Our hashtag is Startup Grind if you're tweeting tonight. Was that not a natural transition? Sorry.
Not tweeting tonight, why not?
We're not tweeting tonight?
No, why aren't you?
Oh, yeah.
Michael will email you every 5 days.
You don't tweet.
Every 5 days for the rest of the year, so watch out.
How do I attract top people? How do I get people that I want working in my company? How do I convince them of all the things they should spend their time on? How do I convince them to work on my project?
I think it's the number 1, the scope of what you're doing. You know, is it an exciting thing that you're doing? And 2, your ability to excite those around you, right? Like your ability to share that vision. Like I thought the way you described your company Shoebox here at the beginning, you're talking about delighting people by bringing their members to the fast. I sat there, I was like, oh, I want to be delighted. I want that delight. I have a son who's 2 years old, and I think about, you know, when he was really little, and I love to look on my iPhone at the old pictures as when he was first born, and you know, those types of experiences, they touch you, and so that was a very nice way of representing it. But other things you can share about the real emotion and of why you're doing what you're doing and why it matters to you so much, and to convey that to somebody else, that's a great way to recruit them to join you on this journey, whether it be an investor or a employee or a partner or an advisor or whatever it may be.
Let's talk about the climate right now in terms of the investing and startups. It is a crazy time. It seems like it's really crazy when companies are raising $20 million and you don't even know who they are. At least for me, it seemed like it used to be like, wow, that company raised $20 million. I remember when Stripe raised $20 million, and it was a big deal. And now it's like, oh, they raised $10 million. It's happening so much. So what data points are you seeing, you know, in terms of the market?
So I think the thing that's probably the most frustrating to this crowd about that dynamic is it's very much a culture of the haves and the have-nots.
Yeah.
If you've got some little hotness and you're in TechCrunch all the time, the money is like lining up outside the door right now, because there's this dynamic that there's no other place for investors to find growth other than the private markets, because there's just, other than technology, there's not been a lot of growth, and there's a lot of capital sitting out there. So it's all come in, and there's a lot of people who are not traditional venture capitalists doing investing. And as a result of that, they're going after the thing that's perceived to be moving, because if you look into the historical data, if you'd been an investor in Facebook, or an investor in Uber, or an investor in WhatsApp, or one of these really big outcomes that would seem to be really moving, that would have made up for, you know, everything else that was out there in the market. And so it's created this real drive for the companies that have perceived momentum, which it makes it harder for others to rise up and compete with that. So it's a little bit of a negative overall. And the other thing that's a little challenging about it is some businesses are being successful today solely because they have access to great capital. There's businesses out there that have negative gross margins, or don't have very good unit economics that are continuing to grow and grow and grow with these bad business dynamics because the venture capital is coming. At some point that will change and that business will have to evolve, and that may be a very difficult transition for those companies to make. So, on one hand, if you don't have access to all that capital, it actually could be better, just like we talked about earlier, that you've built your business from the right principles from the beginning, and you've had to force yourself to make good decisions from the beginning and build a profitable company, or a gross margin or unit economic profitable company from the get-go. So yeah, it's a different environment. We're trying to be very, very cautious and careful about when we do things at bigger prices and bigger checks. But yeah, it's impacted everybody.
Does anything scare you about the current climate, or?
It scares me a little bit when people come in that have not spent a lot of time in the technology private company investing market and write very large checks at big prices, because I feel like it creates a false set of expectations. It's like the WeWork investment that was done recently. I don't know. I didn't look at the company. I don't know the metrics. But what I do know is that everybody now who's got some sort of a co-working space thinks they're worth a couple $100 million or close to $1 billion. And maybe, but I think like it changes and puts everybody at these unrealistic expectations, and that's just bad for the market generally. To anchor yourself to what's happening with a few select private deals. Or another example is there's a company where I met with the CEO a few weeks ago, and he says, "I'm not growing as fast as Zenefits. And I'm just not growing as fast as Zenefits. If I need to recruit, I need to grow as fast as Zenefits." And Zenefits is growing, like a couple 100%. It's really crazy, but Zenefits is also a negative gross margin business. It has a lot of things in it that are, you hear lots of things in the ecosystem about how it's churning employees and engineers, and it's creating a wrong set of incentives trying to be that hot company that may result in people kind of pointing towards not building enduring, but building hot. And you want to build enduring, because that's what you really want. That'll endure through the cycles.
Well, and that's what you hear about a lot of companies that are raising, that are getting to these billion-dollar valuations. They're saying, I have to be there from a PR perspective and whatever it costs, just so as I'm trying to recruit top talent,
Yeah.
I can say, hey, I'm just like them, or like the Facebook example, like, hey, we're on our way, and and this is where we're at. And so it's creating, which then you have entrepreneurs that are accepting terms to deals from, accredited investors, but not experienced investors, which they're saying, okay, yeah, I'll give you $1 billion valuation, but at this and this cost, right? And
yeah. And lots of times they're putting in ratchets and downside protection for themselves, which can have a negative later. But the biggest thing is they're missing out on the benefit that the investors who have been associated with a couple hundred companies before can bring, of helping to see around corners and things like that I think can be beneficial. So.
We're going to take some questions from the audience in just a second. The hashtag is started grind again, since everyone's tweeting. Talk about what trends you're spending time on. What are you excited about?
The thing I'm spending the most time on right now that I'm super jazzed about is the shift towards microservices. And I don't know how technical this audience is or not, but there's a real change happening in the way that enterprises and startups are both building and delivering applications. And that is that they're moving from a world where they built large, singular, tightly integrated systems to very decoupled, loose systems that we call microservices, where literally you're breaking components of your application down into small pieces that are these completely autonomous, independent pieces, and assembling those pieces every time you want to deliver a service. And this is not like a new idea. Object-oriented programming has been a while. Google's been doing it for a long time. The Google search bar calls out to 70 different microservices whenever you do a search, but it's a new idea for the enterprise, because the enterprise has never had the tools before to pull it off. And now that we have cloud infrastructure, now that we have commonly accepted standards around APIs, now that we have containers that would help us package applications in a very uniform way, it's starting to take off in the enterprise, and it's changing the way people build services. And the reason it's so exciting is it's bringing a whole new other layer of velocity to application development, so that an enterprise before that would take months to release changes in their products and services now can release those changes in weeks. And so it's really, really exciting to a geek like me. So that's an area where I'm spending a lot of time. I mean, other areas we're spending a lot of time is how are we keeping, I mean, especially for companies based in the States, how are we keeping ourselves protected from all the cyber attacks coming in from the nation states against the company? That
That
happens
kind
here
of
in
thing,
Canada
that doesn't
too.
happen in Canada.
It happens here too, but people are
would
very
never do
paranoid
that to
about it
Canadians.
south of the border. So that's an area we spend a lot of time. Another area we're spending a lot of time is mobile still. Like mobile sounds like it's an old trend, but we are still amazed by the companies that are being able to be created and enabled by mobile. I mean, two of them that we're associated with, Instacart and DoorDash, just, you know, I talked to a company earlier today that was working in the grocery industry, and they asked me, you know, when was the last time? Tell me, you know, you probably go to this grocery store all the time. And I thought to myself, well, I haven't been in a grocery store in 6 months because every time I need something from the grocery store, I just punch it on my phone. It's at my house in 30 minutes. And that's things that are being enabled by mobile. And mobile is just changing the world by putting this technology in everybody's hand, from crowdsourcing employees to do and deliver things, or enabling me to make purchases. I talked to another company today that had developed this technology where they could listen to the sound waves coming off of a television advertisement and immediately do a mobile transaction. So you could, like, kind of like Shazam, but you could put it up there and it would, some signal would come and automatically a payment, and that thing could be ordered. And I think of like technologies like Instacart. You could literally be watching a Super Bowl ad, listening to the Pizza Hut commercial, click order now, it listens to the sound, and the pizza shows up at your door in 30 minutes. And I think that's pretty exciting how technology is enabling all these changes, and especially in mobile. And so that's an area we spend a lot of time is in mobile. Virtual reality. We think virtual reality is game changing. My partner Ruloff put out a really interesting piece in TechCrunch that kind of outlaid our perspective and view on the virtual reality market. But if you haven't seen the experience in an Oculus or one of these Google VR kits, find a way to try it. It's amazing. It's so immersive. It freaks you out. It's just incredible. And then you realize this is how entertainment is going to be in the future. And this is how gaming is going to be in the future. And it's going to unlock a whole new wave of innovation as we think about the immersive world and virtual reality as a entertainment and or maybe even a professional opportunity. So those are a few of the areas
That's
we
awesome.
count on.
Would you ever be an entrepreneur again?
Absolutely. Absolutely. I loved it. I mean, I absolutely loved it. It was so much fun. The highs were so high, the lows were so low. But it was, every day I came home, I felt this rewarding feeling that I was building something, I was helping people, and I was headed somewhere, and I was working for me, and I loved that feeling of it. And you know, I have tremendous respect for all of you that are doing that. It's an incredible journey. I would absolutely do it again.